Hello, dear students. Welcome to income tax class. As a part of income tax, I have taken very good interesting topic, that is house rent allowances. In this class, I am going to explain how to calculate taxable house rent allowances. Now, what is house rent allowances? House rent allowances is given by the employer to the employee to meet its rental expenditure. For example, if you are working in any company, that company, they will pay house rent allowances. Is like a basic salary, they will add DA and commission. For that, they will give some percentage of house rent allowances. As a part of income tax, that house rent allowances also, it is taxable allowances. Here, one thing you should know that some companies they'll pay house rent allowances to meet its employees' rental expenditure. In other companies, they'll pay RFA. It means rent-free accommodation. It's nothing but some companies they'll give you flat, and that time they will not provide house rent allowances. It means either you'll get house rent allowances or you'll get a flats in any flats they'll provide by any company. Now, house rent allowance. What is the meaning of house rent allowances? House rent allowances is given by the employer to the employees to meet his rental expenditure. Now, how to calculate house rent allowances? For example, some companies they'll pay 10,000 rupees as a house rent allowances. And that time is full amount is not a taxable. Some part of the amount is exempted as per Income Tax Act 1961. Now, I am going to teach how to calculate taxable house rent allowances. See, calculation of house rent allowances. In this, we have to follow this format for calculating taxable house rent allowances. Here, this is the format. Here, you have to write assessee. Assessee is nothing but your name, status, resident or non-resident. We know that previous year 2023-24 and assessment is 2024 and 25. Here, they gave actual HR received. Actual HR received is nothing but how much amount you received from your employer as a house rent allowances. From that, least of the following is exempted. As per income tax, they'll provide 3 points from that. Any one, whichever is less, that is exempted from house rent allowances. First one is actual HR received. Actual HR received is nothing but how much amount you receive from your employer. Rent paid minus 10% of salary. What is rent paid? Rent paid is nothing but how much actually you are paying rent for your house minus 10% of salary. From rent paid minus 10% of salary, what is, you have to calculate the amount. Now, what is salary as for calculating HRA? Because in this income tax chapter, that definition of salary will change from different situations. For example, if you want to calculate taxable HRA, you have a different formula. If you want to calculate the RFA, you have a different formula for a salary. And if you want to calculate for uh, P, gratuity, you have a different salary. If you want to calculate for pension, you have a different formula for salary. For this, salary is nothing but basic salary. See, note number 2, salary for the purpose of HRA is equal to basic salary plus dearness pay plus dearness allowances if enters into retirement benefits. It's nothing but how much percentage of DA will comes to retirement benefits plus commission. It should be on the basis of turnover. How much commission received on the basis of sales. Sometimes in problems they'll give fixed percentage of commission. On that time, you should not consider if commission It's on the base of sales, and that time only you have to consider. So actually HR received rent paid minus 10% of salary and 40% or 50% of salary. What is 40% or 50% of salary? See, 50% of salary will always only for Chennai, Delhi, Kolkata, Mumbai. Nothing but if you are taking house for rent in Chennai, Delhi, Kolkata, Mumbai, we call it as metropolitan cities. We are calling as a metropolitan cities. In metropolitan cities, it is 50% of salary, or other than metropolitan cities, it is 40% of salary. So just we have to compare all the three, whichever is left, that is exempted from HRA. So actual HRA received minus list of the following is exempted, you will arrive at taxable house rent allowances. Here, important point is check note number 3. HR is fully taxable in the following cases. When employee is residing in his own house, it is fully taxable. For example, if you are receiving the HRA, but you are staying in your own house, that is fully taxable because you are not paying any house rent. So that is the reason it is fully taxable. Next, when employee is living in a house for which is not paying any rent, if you are staying in any other house except your house, but you are not paying any rent to the house owner, that's on that case also it is fully taxable. So just you can go through the format of taxable HRA. Just a minute. Now I'm going to explain how to calculate taxable HRA with one example problem. Check this problem. Ms. Bhumika resides in a Kolkata during the previous year 2023-24. She gets 12,000 per annum as a basic salary. She gets DA at 20% of basic salary, enters into all retirement benefits. That is nothing but all dearness allowances, which is 20% of basic pay, which will come for retirement benefits. She also received a commission of 15,000 rupees calculated at 2% on turnover achieved by her. It's nothing but already they are already calculated. They gave 15,000. It is a commission. Next, HRA received by her is 11,800 per annum. Then Ms. Bhumika is receiving a HRA from his employer of rupees 11,800 per annum, but she is paying rent of rupees 14,800 per annum. Calculate taxable HRA. Now we'll calculate taxable house rent allowances. Assessee name Ms. Bhumika, previous year 2023-24, assessment year 24-25, and status is resident. Now, actual HR received. In this problem, they gave actual HR received by Bhumika is 11,800 less. List of the following is exempted. First one is actual HR received is given in the problem 11,800. Rent paid minus 10% of salary. Rent paid, we know that it is given in the problem only. It is 14,800 minus 10% of salary. In working note, I explained what is 10% of salary. Salary is equal to basic salary. How much is he receiving? 12,000 per annum plus dearness pay we don't have. Dearness allowances, we have 20% of basic pay. Basic pay is 12,000 into 20%. You'll get 2,400 plus commission, they gave 15,000. Total 10% of the total salary for HRA is 29,400. If it is 10% means 2,940 rupees. So 14,800 minus 2,940 is 11,860. Next, 50% of salary. Why I took 50% of salary? I took 50% of salary because see, Miss Bhumika is staying in Kolkata. It's metropolitan city. If it is metropolitan city, we have to consider 50% of salary. So salary, we know that how much? 29,400 for the purpose of HRA. If it is 50%, will arrive at 14,700. Just you can compare all the three. Which one is less? 11,800. So actual HRA received 11,800. Less least of the following is exempted. Which one is least? 11,800. So taxable HRA will be nil. So Miss Bhumika, no need of paying tax on HRA received by her employer. I hope you understood this problem. If you have any doubts, please contact me by below email ID. Thank you.